Hi, thank you so much for coming. Welcome. My name is Samuel Price, the Crypto Lifer. You've joined the trading group. Now let's give you comprehensive skills to help you. We're going to give you this course to kind of give you what you need to give you more value now that you've joined the trading group. So check it out. The first thing we're going to talk about is candles. We're at tradingview.com. There's a link to TradingView. Open up a TradingView. Get yourself a TradingView account immediately. It's going to be the spot, the place to be. We're going to do all our work here on TradingView, all right? First thing we're going to talk about is just the charts. We're going to look at the daily charts. Right now you see green and red rectangles, right? We call these candles. Every single line, colorful movement is a candle, right? So that's a green candle, that's a red candle. We're on the daily time frame. When you're on a time frame, it means each candle represents that time, meaning this candle holds 1 day of time. That day is Greenwich, England, 12 o'clock to 12 o'clock every single day. I'm 4 hours back, so it's 8 p.m. to 8 p.m. is my day. A cool thing to do is to right-click this column and hit countdown to bar close on TradingView. It's going to tell you when the candle will close. For instance, this daily candle will close in 6 hours, 18 minutes, and 29 seconds. Super, super important to know. So, a green candle opens at the bottom, closes at the top. A red candle opens at the top, closes at the bottom. What are these lines coming out? These are the wicks. The wicks are the ranges that we went to. If you see up in here, we have O, H, L, and C with a number and a percentage. That's going to give us the information out of every candle. So if we hover, and you can see even when I'm not on a candle, I have this Y-axis that's touching candles. Wherever I go left or right, I'm going to be touching a candle. So this candle opened at $30,005.36. The high was $34,436.25. The low was $29,906.47. And the candle closed at $33,082.50. It would go up $3,078.39, up 10.26%. So that's what happened inside of a day. All right. What's cool about it is I'm going to teach you how to look at multiple time frames. When you're with me, you're going to learn a lot more than just the daily. Let's zoom into the 4-hour candle and talk about it and break it down. And you can see kind of what's going on here. Inside of the daily candle, we have 6 4-hour candles, which I now could have found a flag, and this flag could have propelled us to the upside. So by zooming into smaller time frames, I'm able to see probabilities based on patterns that I couldn't see before. Let's get back to the wicks idea. What are these wicks? The wicks are just the ranges. For instance, this candle opened here, went a little low, went a little high, and then closed right there. That's a green candle. Those are the wicks on either side. Wicks do tell a story. If you just look at some of the bigger movement we've had in Bitcoin on the daily or even the 2-day chart, you can see that a lot of big movements are started when we have 2 candles next to each other with wicks together. We call those topping tails or tweezer tops. I call them tweezer tops and tweezer bottoms. That's a tweezer top. 2 wicks together, stuck together, you have a movement down. Look at this tweezer bottom here, movement up. Look at these 2 wicks here, movement to the upside. So wicks don't always mean, but they show you that there's pressure coming down. For instance, these 2 wicks, sell pressure sent us down. These 2 wicks are buy pressure, sent us to the upside. So watching how wicks perform and how big a wick is can tell you a little story of where price action is going to go. A lot of times a big move comes after we get 2 wicks together, boom, and a big dump comes when we get 2 wicks to the downside. So understanding wicks, and those are some simple things. And then you have engulfing candles. An engulfing candle is when you can put every candle inside. For instance, like this is a bullish engulfing candle. You can put this red candle inside of it. This is a bearish engulfing candle. You can put this candle in both of those, right? This is a bearish engulfing candle. You can take this candle and put it inside. It engulfs the candle to the left. We have a movement to the downside. Here's another bearish engulfer. You can put this candle inside and we struggle and eventually go to the downside, right? So you get bullish and bearish engulfing candles. When you can put the whole candle inside the one right here, that's a bullish engulfing candle. You can put that red candle inside, we get a move to the upside. Notice the wicks to the downside propelled us up because it was buy pressure. Notice the wicks here from the top propel us down. So when we get sell pressure, you can see wicks. When you get buy pressure, you can see wicks pushing up. So those are the wicks, those are the candle bodies. Just a quick little idea of how to read candlesticks and understand. There's far more things in candlesticks. There's dojis, there's indecisions, and it goes far on beyond what I'm showing you. I'm not a master of candlesticks. You don't have to use them. Some people use them all the time. They're not a key part of my trading success, but they are something that I pay attention to. I'm always looking at the wicks and the engulfing candles, something that I'm paying attention to all the time. So that's candles, right? And no matter what time frame, look, we go to the 4-hour, each candle represents 4 hours long. Now we see more information. You get a little more detail. The further you go into a smaller time frame, it starts to show you far more information. Like here, that was just a daily candle right there. But now look, we have a flag that we played to the upside. There's just so much more information in the 1 hour. The 1 hour has basically 24 candles, right, inside the daily. And then the 15 will have 96 candles inside of that daily. And you have way more information here. And, you know, people scalp on the small time frames. Like some people just trade the 15 minute for a little move. They don't really care what the daily's doing. Some people trade the 1 hour. Some people swing the 4 hour. I'm going to teach you how to take advantage of all the different time frames and use them so you can use them for your success in trading. So right off the bat, just wanted you to understand the concept of candlesticks. What are the wicks? The wicks are basically where price went, you know, but not where we closed or opened. They're on either end of the candle, all right? And where the candle opened and closed, those are going to be, you know, where it starts and stops is where the actual price action began and ended on that time frame. Again, the 1 hour, every candle is 1 hour long, all right? The 4 hour, every candle is 4 hour. The 15, every candle is 15 minutes long. The time frame you're in depicts basically how much time each candle holds, right? When you're in the daily, each candle holds a day long. So these are candles. This is like your basic beginning idea to trading. And now I want to kind of discuss the differences between the time frames. You know, I kind of touched on it again, but I want to reiterate. I mainly trade the daily, the 4 hour, the 1 hour, and the 15. I go a little lower and a little higher depending on the time frame or what I'm looking for, but for the most part, these are the key areas that I'm watching and paying attention to. All right? So when I zoom in and focus on time frames and I say I'm looking for a scalp, I'll make sure the daily looks bullish, and then I'll go further into a smaller time frame to find a flag or something that could make sense. The smaller time frame, the more volatile, meaning a flag might be quick up and come back down. If you see a flag on the daily, it's probably going to last longer and produce more. The bigger time frames are going to give you bigger gains, but they're going to take longer. For instance, if you find a bull flag on the daily, that might take 8 or 9 days to play out, as opposed to a bull flag on the 1 hour might only take 8 hours to play out. Okay? So understanding these concepts is key, and as you play and mess around with time frames, you'll get more accustomed to them. I tell you to trade the 4 hour a lot. Like stick to the 4 hour and trade that time frame. Time frames are like cars in the garage. I talk about them. If you had 5 cars in the garage, all these different time frames, you couldn't drive each one at the same time. You take one car out. After 10 rides, you'd get to know one car better than the other, and then you'd switch, right? Same thing here. After 10 trades on the 1 hour, you'll get to know it better. After 10 trades on the daily, you'll get to know it better. Trade the time frame and stick to it. Be like, I'm going to trade this pull on this time frame for this gain, and wait for it to happen. Watch it happen. Watch it play into price action. That's very important that you're doing things of that nature, okay? Stick to your time frame once you find the one that works for you, or once you have one that you're going to use for that period of time. Like the 7 minute, I like to scalp on. The 4 hour, I like to swing trade on. But when I do, I pick that time frame and I stick to it. Recently, I've been watching Bitcoin in the 8 hour flag. It looks really nice on the 8 hour. That's the time frame I'm sticking to Bitcoin on, right? Once it plays out, we'll go from there. But I'm watching Bitcoin on the 8 hour time frame. So it is important to stick to the time frame that you decide to trade it on. You can use other time frames for information, but don't let smaller time frames kick you out of a bigger time trade if you're watching it on a bigger time frame. All right. This will make more sense as time goes on. And when you start with us, you're going to be starting with the daily, the 4 hour, the 1 hour, and the 15. There are way other time frames. How do you add a time frame that's not there? Scroll down to the bottom here. You can see 1 minute, and you could turn this into anything you want. You could turn it into the 65 minute. Hit add. When you do that, look, I just added the 65 minute. It added it right there, but it's still not above my chart, right? How do I get it above my chart? I hit the star, and it now, look, if we look here, we're going to see the 65 minute time frame. So you can add unique time frames. The most will be here, but you can add unique ones right here below. You can find your minutes, day. You can pick minutes, months, days, hours, right? Put your time, hit add. Then it will be here without a star it, and it'll add it to the top of your list. And that's kind of how you're going to add time frames. All right, the next thing I want to discuss is support and resistance. And remember, by the end of this, I'm also going to show you how to add all the indicators to your chart. But right now, I just really want to discuss support and resistance and how important it is. For me, I like to go to the weekly and zoom out to the bigger time frame and set my weekly support and resistance. You can clearly see Bitcoin had resistance, so it came and bounced. This is what happens. Wherever you see previous support, you will get a resistance, even if it's a year or two ago. Look, Bitcoin bounced on July 19th of 2021 off of this key level at 31,250. Where did we come and have resistance? Right there at the same level where we had bounced before. That became a resistance. So previous support becomes resistance. Once you get above it, that area of resistance should become support. You'll get a bounce right off that to the upside. So people are looking, are we going to get a bounce? You know, and it is likely that if Bitcoin comes back down, we would bounce off this key area of resistance because previous resistance becomes support. You can break it down in smaller time frames too, like the 4-hour, and you can really see how it gets respected. I made a bunch of good trades recently off of just support or resistance alone with some supporting ideas behind that. For instance, here's a one that I really took for a nice gainer, and that was right here. Bitcoin had previous resistance. It came down for support. If we go to where the candle closed right there, we came down for support. After that, I drew a flag and was able to get a nice gain because I kept my stop loss below this area because it was likely we had retested it. We came back up. We were going to get the pump to the upside, right? So that's previous support or resistance playing out right there in front of you amazingly well. It also does the same thing here. Like if you have a support or resistance that you've been toying with on the other end, like look, when we came up here, we had a major resistance right here. Resistance here. Similar to this idea. We had resistance, Bitcoin came down, wicked, came back up, it made the flag. I used this flag for a gain, kept my stop loss below this area because I was using my stop loss as an idea that we had already had resistance. We come down to support. This is what we call an SR flip, a support or resistance flip. This resistance becomes the support. We get our move to the upside. Was it a coincidence when we came back down, we tussled with this level before we got our bounce to the upside? All right. Previous resistance becomes support. Look, then we had resistance here, resistance here. Where do we come for support? The same area, 28,174 for a move to the upside. Here it is again. You can see that we wicked to this area. Where do we wick back down? Right there. We did an SR flip of the line and pumped further to the upside. And so you're going to see this over and over again. I don't care what asset it is, gold, silver, Tesla, you name it. You're going to be respecting your support or resistance areas over and over again. Look, resistance here. Where do we come down before the bounce? Right here. But then once we got above it, you can see right here, bounce. We bounced off that. We came above resistance, resistance. We had to flip that. If we can't get above it, expect more downside. When you can't get above a resistance, that's a key way to short the market. So say we have support, support, support. We lose it. We come back again. We can't get above it. Beautiful place to take a short to the downside. All right. Happens a lot. So watch that. Support or resistance are so amazing. I'm telling you right now. And they play out. Look, resistance here, resistance here. We're going to bounce from this area. It was very, very obvious because that was the previous resistance. That was the bounce point. This resistance, that was the bounce point. And you'll see this over and over and over and over again. I could spend hours on this for days on end discussing how support or resistance play out on bigger and smaller time frames. Here it is again. Look, we had resistance, resistance. We came out, we got a bounce to the upside. But then we had resistance here, so we had resistance there. When we came back out, where did we bounce? Right there, because previous resistance became support for the bounce on out. This is going to change your life if you trade it diligently and disciplined. Support or resistance is amazing. How to set support or resistance? Like I said, go to your daily first, right? And look for key areas where candle bodies met on either end or where candle bodies stopped. Sometimes I use the wick, sometimes I use the candle bodies. It depends on how many candles we have in that area and how important that area looks. But here you can see, like we wicked, we candle bodied, but for the most part, you can see the area was 25,200 area. We bounced off it on the daily. The bigger time frames, it's going to be more of a range. It may not be an exact number. It's going to be a range. And I always kind of identify by using like a rectangle here. And you can just kind of show that it's not an exact line. It's an area that we've kind of maybe a $50 area, a $100 area, depending on how much bigger Bitcoin gets in price. All right. So these are key things that I want to talk about and keep you kind of watching. And it's super important. So I like to use these green lines. To use them, you can go 1, 2, 3, 4, 5 down, grab and where the brush is, but go down to the rectangle. Another cool thing is once you have something that you like on the charts, like you have a rectangle, you want to use another one, you don't have to go grab another one. Just hit control and pull off, and you're going to be able to use that wherever you want. Towards the end of this, I'm going to give you a whole comprehensive way to use TradingView. All right. And I'm going to show you all the different tips and tricks that TradingView has for you too that can kind of get you started as well. So that is candlesticks, a little bit on time frames, and support and resistance. Let's talk about the indicators in which I use. Let's add all the indicators. Let's delete everything now, and let's just talk about indicators. All right. Here's a blank chart. What indicators you get? Well, number one, you're going to get volume on the bottom with price action. So you get volume and price action immediately. But what do I add? How do I add? And what do I put on the charts? Let's go and build my chart. All right. And let's talk about how to make a template and how to save it so you have it forever. You can call it the Lifer template if you want, Samly template, whatever you like. Just make sure you make a template, and we're going to show you that. So the first thing we're going to do is we're going to go up here to indicators. We're going to type in CBC 5MA DRS. We're going to click on that. It's going to give you 5 moving averages, okay? And they're going to be kind of in an order. If you hit the settings bar, which is the gear right here, when you hover over it, you're going to get the white or gray, red, purple, blue, and yellow. White is 21, the red is 50, the 80 is the purple, the 100 is the blue, and the 200 is the yellow. These are going to be my 5 simple moving averages. Remember, I look for them to get close and tight before a big move comes. I could tell you that a big move is coming for Bitcoin because these moving averages got really close. I could tell you a big move is coming for Bitcoin. They got really close. Even when they're coming down right here, I knew a big move was coming. Right there, I knew a move was coming. Every time they get really close and tight, a move is coming. If we're above the 200 SMA and we're close and tight, it's likely we're getting a pump. Another thing about the moving averages is when they're far apart, it tells me things are struggling. Whenever I see the 21 really far away, it tells me to watch out. Whenever I see them close, it tells me I should start to accumulate. But again, this is the first indicator in which I add. It's CBC 5MA DRS, all right? It's 5 moving averages in these colors, in this exact color format, all right? Bang, bang, bang. The next indicator we're going to use and add on is the MACD, the moving average convergence and divergence, all right? The MACD, what it does, and we just added the MACD here, sorry. The MACD is this right here. And again, how to add it, come up here, type in MACD, nice and slow, click on the first thing. It won't be start, and it will go into your favorites. You'll have all the favorites waiting for you, ready to go. Now we have the moving averages. So now we have price action, volume, the moving averages, and the MACD, all right? MACD is going to show you overbought and oversold regions. It show you a histogram in the middle. The bigger the histogram, the more is happening. So if it's a big histogram and it's green, it's a lot of buying. If it's a big histogram and it's red, it's a lot of selling, all right? Important to understand and use these concepts. MACD is the worst indicator to use by itself, but it's a great complementary indicator to use in conjunction with other indicators so you can visually see kind of what's happening and where we're going, all right? The next indicator in which I add is the RSI, the known famous RSI, the relative strength index. And it's an amazing indicator. It has an overbought region below 30. It has an overbought above 70, oversold below 30. When you're above 70, you're overbought. When you're below, you're oversold. It's also how I find divergences, which is in my advanced course where you can get into divergences with me if you want to take that course and get in, and that will change your life. But for the most part, the RSI gives you overbought and oversold. Whenever you're this high, you're getting into an overbought region. You're getting to a place where things are a little too high, all right? Whenever you're down here, you're getting into a low value area where things are really good and you're buying things at the low. So this gives you premium and discount and really kind of can on the long term show you, and as well as scalping on the small time frames. If you get low here, the 1 hour could make a pump. If you get high here, it could be a time to take some profits depending on what's happening in the markets. But this is the relative strength index. It takes the strength of all the pumps any asset has had and kind of puts it on a ratio against all the previous pumps and say, well, compared to all the pumps this has had, this is towards the end of its rally, And massive bull runs, this can get a little extended and pushed to the top, and meaning it can kind of stay a little higher than it wants to because it's not used to seeing that much buy pressure in its lifetime. But it's still an amazing indicator. It's very sensitive. It gives you a lot of awesome information, and it has made a lot of people a lot of money who have used it correctly. The RSI, Relative Strength Index. The next indicator we're going to add is the SRSI. I just type in RSI, and then I find Stochastics RSI. Now, you can use the one here or the one with divergences. As a beginner, probably just hit this one. I use the one with divergences because I know my divergences, and this just shows me some key divergences that I may want to pay attention to. I don't live and die by the signals that this gives me. I find my own divergences. At the same time, though, it's nice to have a backup. Some other smart guy programmed this, and when it's like right there, called a bearish div. Basically, when the RSI stochastics were moving down, but price was moving up, it told us that we were likely going to get a drop in price. And lo and behold, we did get that drop in price. The stochastics RSI are kind of a hybrid between the MACD and the RSI. It's got the red and the blue line like the MACD, and it's got a dotted line on either end like the RSI, but its dotted line is at 80 and at 20 as opposed to 70 and 30. All right, whenever we're about here, we're getting into the overbought region, meaning there's a lot of people who have bought in, and we're kind of at the end of its rally. Whenever we're down here, we're getting into the oversold region, and it's telling us that it's probably a good place to start to buy in because most of the sellers have waned and sold off. So I use this in conjunction with the other indicators, but what I'm really looking for, like before Bitcoin pumped here, you can see that the RSI had a little curve. It was low. The MACD had a lack of what's called bearish momentum. The visualization of the bears, which is this histogram, was very small. Look, there was a lot of good bears there, a lot of bears there. They were selling, you know. Here, there's just no bears, like a lack of selling pressure. So it tells me that there's a lack of selling pressure in this area, and we definitely have to be careful. So that's one thing to kind of point out about the stochastics RSI as well as the RSI. Last thing I'm going to add is the VRVP. I'm going to come up in here and type in VRVP, the Visible Range Volume Profile. We're going to click on that. It's going to get added right here to the side of the screen, and here we see the VRVP. What it does is it tells us where there's a lot of buying and selling. Bitcoin likes to move through price action, and it likes to go where there's the most liquidity. So for instance, when Bitcoin was low down here, and one thing about the VRVP, when it comes in chunky like this. I don't like that. I want it more delineated. I want to see more lines. I hit a 0 here. All right, I changed the 24 to 0. Let me do that one more time really slow. Remember, we go up here, we type in VRVP, we click on it, we hit the star so it becomes a favorite. Once we click on it, it gets added here. Then we can hover on it, hit the little gear, and then here we can change the 24 and just put a 0 next to it. That's all. We're not doing anything but adding a 0. And now you can see it's just more delineated. It's not as chunky. Way back when Bitcoin had dumped and I was looking for the bottom, I saw this cup and handle and I saw a gap of the VRVP. I kept saying to everyone we could easily get up to 19K or further because there's a gap here. Then when we were here, I said we can easily get up back to 27,000 because there's a gap here. Whenever you see a gap in the VRVP, it tells you price action can move through it very fast. So if you're in a trade and you see that you're starting to get above a high volume node, we call these nodes. If you're above a high volume node, you're likely to head to the next biggest node that you can see above you or below you. This red line is called the point of control in the VRVP. It tells us where the most buying and selling ever occurred in an area. All right, that's basically why it was the bottom. So many people bought into that area, or institutional money, right? The retail missed out, but institution got in. We got in. We were paying attention. So when I look at the VRVP for what could happen to Bitcoin, and again, why does this number keep changing, or the red and yellow? It represents buying and selling pressure. Okay, if you click on it and you can see the visibility, you can see, look, value area up is blue, value area down is the orange, right? So buyers are blue, sellers are orange, all right? And it's not as important to know. You just want to know that that's the key area to watch for price action, all right? So once we got above this node, it's likely we'll head up to 38,000, right? And once we get above there, it's likely we head up to 47. And once we get above 47, it's likely we go to 57, just like we move through these other gaps in the VRVP. Now, the VRVP is not fixed, meaning it moves whatever I put on the screen. So when I put all these bars on the screen, it gets that data. But if I remove these bars from the screen and only give it this data, it's going to flip and only show me what that shows. See how it changed? This can be confusing for beginners. There's also another way to access this, and that's to go down to right here. So if you go to 1, 2, 3, 4, 5 down, and you click Fixed Range Volume Profile. And then what you're going to do is you're going to find an area. So if you want from here to here, you click from there. If you want from there to there, you're going to basically take a scan of price action, and it's going to give you the VRVP in that area. So like I could start from here and go to there. And it's going to tell me all of the buying and selling in the most prominent areas. Now, this will match up with the fixed range because, look, that's the same. That's the same. The only thing is the fixed range will give you more data as you bring more information onto the screen. This indicator and this indicator are exactly the same. One is just being able to fix it on a small period of time. The other one shows you everything that you give it on the chart, all right? One can be accessed by adding an indicator. One you can just grab from here. I believe this one on the right side, you need a premium account, all right, and good RAM on your computer to keep it up. Like you want a really good graphics card because this could, when I had a lesser computer, the VRVP would be kind of like bogged down and it would annoy me. But now that I've upped my game and got a really good computer, the VRVP is great and it works really, really well. So those are all the indicators that I use. I don't use really anything else. I find divergences, but we'll get into that on another time frame. But how did I get rid of all the indicators real quick? I just double click the screen. When you double click the screen, it shows you whatever screen you're on. So like, say I just wanted to see the MACD alone, I would double click the MACD. Say I wanted to see the SRSI alone, I would double click the SRSI. Say I wanted to do this, the stochastic, I would double click the stochastic. All right. And this way I can just see whatever window I really want to focus on for the time being. All right. No matter what else I'm doing. So again, CBC 5MA DRS for the moving averages, MACD for the MACD, RSI for the RSI. You can type in RSI again and just pick it, or you can type in SRSI. I picked the one with divergences, remember that. Now there's a stochastic, don't get that confused. That's a different indicator. There's stochastic and there's stochastics RSI. I'm using the stochastics on the RSI. It's not the same as the stochastic. It's a little more sensitive and gives a little, basically more entry points. And I find it's better to scalp and to take profits on. So I use the SRSI. Don't confuse it with the stochastic. I use the SRSI. Now, and then the last thing is the VRVP that we add here, the Visible Range Volume Profile. Some people call it the VPVR for whatever reason, but I find it here on TradingView as the Visible Range Volume Profile, the VRVP. And those are the 5 indicators that I use and how to add them to your chart. Now, we're not done. You're going to come up here and you're going to type in Save Indicator Template. You're going to call it Lifer Vision, right? This is going to be your Lifer Vision. And this is going to be a great way, and then hit Save. And then you will have, if I hit Save here, you can see in my templates, there will be, and I want to pick a template, I go down to the L's, there will be a Lifer Vision in there. And I have a bunch of different templates that I've learned. Some people have taught me things that I've kept, I've gone, but Lifer Vision right there, and it has all the indicators in which I've added. So you have Lifer Vision ready to go. You have to do this so you're ready to go. Very, very important. Lifer Vision. All right. So that's how you add all the indicators. That's how you create a template for them. Again, go up here, Save Indicator Template, name it, and hit Save. You will now have access to this. You won't have to remake it every single time. Your charts will come out ready to go just like this. While we're here, let's talk about some of the shortcuts for navigating TradingView. Things you're going to be using a lot while you're doing it. Write these down as you go. I'm going to go through them relatively quick. So when I'm making a line or I need to find a pattern, I hit Alt-T. Alt-T, and then I click the screen. It allows me to make a pattern really fast or a line. Then I want the measured move. You could all go here every time and click on that, but isn't that cumbersome to have to go there every time? I just hit Alt-T, and I can do whatever I want, make as many lines as I want. If I want to delete something off the screen, like I don't want these 3 lines, I hit Control-Z. Control-Z just deletes my last movements. It backs me. It's like going backwards. All right. If you ever did a Word document and you did something you didn't like, you hit Control-Z to delete what you did. Same idea. If I want to draw support or resistance, I hit Alt-H. All right. Alt-H. Now I want to right-click Alt-H, hit the settings, and click price label. Click on that. I want to make sure there's a price label on the line when I put it on so I can see the exact number that I put it at. 25,336. I really like that. That will go the whole length of the chart. Now, if you don't want it to go the whole length of the chart, we have what's called like a ray. Hit Alt-J. Alt-J will stop exactly where you're at. So if I want it here, hit Alt-J. If I want it here, hit Alt-J. You get wherever my cursor is, it's going to stop exactly where I'm at in the chart. It's also going to label it right there because I right-clicked and add label. You can make these different colors too. You can enhance them. You can make them a brighter yellow, purple, whatever lines you like, you can make them. You can right-click. Everything here can be changed. The background can be changed. You can add gradients. You can do so many different things. Like right here on my background, on the canvas here, I added a gradient, right? A little lighter or a darker gradient, but it's a nice little gradient. Gives it a little cool futuristic look to the chart instead of just black. What if you get into Fibonacci and you want to draw your fibs? You want to find out a fib level. Like we were able to get in on this fib level here on the 4-hour time frame. And I remember pulling the fib here and taking a look at what happened right here, and the fib was a 786 fib retracement. So I hit Alt-F, clicked on the beginning, clicked off. Alt-F is a quick, Alt Fibonacci, it stands for fib. So Alt-F is going to be quick Fibonacci for you. That's going to be your Fibonacci shortcut. So Alt-T creates the trend lines. Alt-F is Fibonacci. Alt-J and H create support or resistance lines. J is a ray, H is a long line across the whole entire board. Okay? And then Control-Z to kind of take away what you're adding. If you want to kind of go back real quick and you don't want to have to hit the delete button every 5 seconds, just hit Control-Z and you'll be ready to go. Okay. Another thing is when you're here and you're using all these tools, you can star them. Like I have the highlighter and I use it, I star it. Once I star the highlighter, it'll add to this quick menu here that I can keep ready on the ready that I can access whenever I want. So I don't have to go to this menu every time. I can access it really quick here if I'm around. All right. If I don't want it on the menu anymore and I don't use it a lot and I decided, you know what, I don't want to see that all the time, I can go here and I can unclick anything I want and it won't be here anymore. So if I don't want the highlighter there, I can click here and unclick the star and the highlighter will disappear from the fast menu. Zooming in and zooming out, like you could just zoom in. I have a spin wheel on my mouse, all right, to zoom in and out, and I open up like this and then I zoom in and out. You can also hold Control Control is going to keep the price action you're looking at in front of you, but still zoom out for you. So it's nice. Like the other zoom out is just kind of make things so big that they just disappear. So if I'm looking at price action again, I can hold control and zoom out. If I just zoom out, it'll just move, but it will eventually move price action away. If I want that price action to stay, hit control and I'll still see what's on the screen. We're going to get into risk management in a second. We'll take this flag here for Bitcoin and use it as a good example. Also, sometimes I remove the moving averages just for a second. They're a little convoluted, but I use them for information. But when I want to see my chart clean and I'm just looking at support or resistance, I will remove them so I can see things kind of in all their entirety, just nice and clean. So look, this is what's called a bull flag. It's a flag to the upside, right? I find the measured move by taking a poll. So here's what we're going to do is we're going to kind of build the trade here. We're going to go here to what's called the long position. 1, 2, 3, 4, 5 down. Long position. 1, 2, 3, 4. Yeah, 5 down. We're going to hit the long tool. What this does is it lets me see where my stop loss would be, where my take profit would be for me, and it gives me a risk reward ratio that I'm looking for. I'm always going for a 3-to-1 for the risk reward ratio, okay? I also have a video on risk reward ratio in the trading group as well, but here we'll touch on it the same. So the first thing I do is I set support or resistance lines. You know, where was the previous support? So right there, I can see that, boom, we had resistance there. I can see that, boom, we had resistance there. And we have a nice support zone that bounced right there, which was previous resistance. So cool. I can even put one in right here because previous resistance became support there. We broke above it. And there's clearly a resistance there that was used as support. So what I do is I find out where I would like to take profit, which is the measured move, which I get from the length of this pole. See that? It's the length of the previous pole to the upside. And it gives me a target. Now my target for Bitcoin is about 30,300. Great. And then what I do is I find my stop loss. My stop could be somewhere below this previous low. And I can risk 2.1% to gain 7.9%. That's a 3.69 risk reward ratio. I figured this out by the measured move and the support or resistance. If I didn't know support or resistance, none of this would have made sense. All right? None of it. So just a very important thing to think about. Once I've found my pattern and I've set the risk reward ratio, I can take the trade if I get a 3-to-1 or better. If I lose 7 of these trades, I'll lose 7 times 2%, 14. But if I win 3, I'll win basically, and I've raised that to an 8, I mean, I'll win about 24%. I'll win 10% more of my money, and I'll only win 3 out of 10 trades. Everyone thinks profitable traders win every trade. We don't. We just win like 30 to 60% of them, really. And as long as you are winning 30 to 60% of your trades and you constantly use this over and over again, and you don't over leverage and you don't get too risky, you will find you know what coins to trade, and you look at sentiment, and you also look at like what's hot that week and where the volume's going. You'll have a higher likelihood of winning trades over time. So I use this, age-old risk management strategy in conjunction with my other kind of in tandem with searching for coins, looking for the markets, and finding out where the sentiment is. For instance, if I see this bull pennant and it's on Pepe, and Pepe has 1 million tweets that night, there's even more likelihood it's going to break out. I mean, not only does the TA say it, but also there's sentiment involved. So, and I'm not saying, show me the charts and I'll show you the news. The chart will show you usually before a big move comes. So this is one thing that I want to kind of show you and discuss too, is how to use the long tool and create proper risk management using the long tool. You're going to have to know your patterns and your support and resistance and your measured moves to be able to do risk management properly. That's why my TA goes hand in hand with risk management. All right. Super important. One thing I will tell you is I like to use AltTradey to set up a lot of my altcoins, because AltTradey does a really good job of positioning and trailing my stop and moving my stop around. And I really like the way it works. So because I have a video to AltTradey, definitely check it out in the watch first section. You definitely want to see that. And that's going to also bring you a little bit of more risk management ideas. And it's the same thing. Say we're going to move this to the next target. We saw this flag and we wanted to trade this flag. I would map out the flag. I would take out my measured move, right? I'd look left and right and look for support and resistance levels. I can see clearly here that we seem to get above this level right here because there was resistance. I can see that we have a move there. If we flip that, we'll continue. And then again, I would take my long tool, put it here, see if I can get 7.3%, and I can risk about, right there at about 2%. That's a 3.5 risk reward ratio. So I'd like it a little bit lower than the stop loss. If it gets a 285, it's all right. But look, it's still a 3-to-1 really right on that area. And there's another trade I could take because I have a 3-to-1 risk reward ratio. I got to stop below or near the support, and I know where my measured move is. By knowing my support and resistance and my measured move, I'm able to use this long tool and create proper risk management. Without knowing the technical analysis, I cannot use proper risk management, and that's why they go hand in hand. I hope you like this tutorial. Very, very educational. I hope you got a lot out of it. These are the tools, tips, and tricks you're going to need basically to get going on TradingView and to start kind of doing what we're doing and understanding what we're doing. You're going to have to add these indicators. You're going to want to know the shortcuts, and you're going to want to be with us drawing. The more charts you draw, the more you post, the better you'll be for me, the better you'll be for yourself, and the better you'll be for all the people in the trading group that are learning. Remember, every time you enhance, a beginner watches you, and you have a chance to do what I do every day on the live and to teach. So if we all become teachers together, we can really grow a mastermind of people that are all really helping each other out and getting to another level. Thank you so much for watching this awesome video. I really appreciate it. I want to continue to give you value. If you continue to come and support me, I will continue to support you. So shout out to everybody here. Thank you for watching, and good luck on your journey. I love you, and you can do it. I know you can.